Real estate markets during the holidays are a little bit weird. Today I want to run through all the most recent market stats. I'm a nerd, I love numbers. I'm going to put the stats right up here for you so you can follow along, see exactly what I'm seeing. Let's dive into this, see what's going on in Southern Utah this holiday season. First thing is inventory is down a little bit, up overall over the last few months. We do have a little bit of a dip coming into the end of the year. New listings are way down. The rate of sales is a little deceiving on the graph here, the yellow line. That is really last month's pendings closing this month. Not a great representation of the rate of sales, but if you look over here, I ran a custom hot sheet for just the month of December. We've actually had 295 deals go pending just since the 1st of December, which is a really big number. The last couple of years, we've seen about 220, 240 closing in December. You can compare that directly to 298 new listings taken. So you might think, okay, well, new listings are still outpacing pendings. You got to factor in there's 33 contingent deals. From new listings, you also got to factor in 56 have expired, 49 are withdrawn. People just saying, I don't want to have showings, Thanksgiving, Christmas, I don't want to, leave my house while it's all decorated and presents are under the tree, whatever. That's a temporary withdrawal of the listing. And we have 104 canceled listings. And so the net effect here is actually a really serious inventory reduction during these holiday months. If you're a seller, it actually makes a lot more sense to sell during the holiday months than you might think, because you've got a lot less competition, inventory is going down. And so if you wait till the first of the year to list your property, you're just going to end up competing with, you saw those withdrawn listings, those canceled listings. We're probably going to see a large number of those pop back on market after the first of the year. Better to list when you have an inventory reduction during the holidays. Of course, that doesn't work for everybody, but if it is feasible, don't let that fear that nobody's buying stop you from listing during the holiday months. So inventory overall is a little bit down. Expect that to go up after the first of the year. Our absorption rate, basically that's our month's supply of homes. If we didn't list another home ever starting today, it would take us as 4.74 months to run out of homes. That's pretty high. You can see it's been trending dramatically up over the last few months. Sellers are saying, yeah, I'm ready to list my house. I didn't really like the house I bought during COVID. Now that inventory is starting to come on the market, I'm gonna maybe look for something better that fits my needs a little more. People maybe are just accepting rates are a little bit higher. That we're probably not gonna see 2-3% again anytime soon. As my lender friends say, marry the house and date the rate. You don't have to be in your interest rate forever. You can always refinance out of it. So a lot of people are starting to list their homes, maybe look for other options. Let's talk about list prices. This graph makes it look a little bit bumpy. The yellow line here is really the only one I pay attention to, which is our sold median sale price. That line trended a little bit down in November coming into December, 505,000 is what you see there. But I mean, this range that we've seen on the yellow line between kind of high fours and middle fives, it's been bouncing between those 2 points for most, if not all, of the last 2 years. This is actually a very, very flat graph with prices. It may go up a little bit, 1 month down a bit. That median fluctuates a little bit. But I mean, depending on your segment of the market, you may be seeing either an upswing or downswing. But generally speaking, the market's completely flat, which is interesting because inventory, again, has been going up. And so regardless of the inventory, apparently it's not quite high enough for it to negatively impact prices, at least on the large scale, on the median. Again, depending on your segment of the market, maybe if there's a lot of townhomes for sale in your townhome community, you might have to reduce your price a little bit to get it sold in a timely manner. But overall, prices are completely flat right now. Days on market is a little bit up over the last month or two, but it's on the lower end of where it's been for 2024. 66.2 is the average. I don't love that number. I'll show you why in a second. So getting down to our summary statistics here, we've got our absorption rate. We're 17.9% higher inventory based on that number than we were a year ago. Our average list price is up 5%, median's up 1%. Again, what I said, totally flat. Median and average, I mean, that's within a 5% margin of error. We are just flat flatlining on prices. So look at the difference between these two numbers here. We got our average days on market, that's CDOM, our median days on market. You can see the huge difference between those two numbers. I typically like the median better because the average can be skewed really high by listings that have just been way overpriced for way too long, sitting on market for a year, 2 years. If you look at the median, that tells us that half of the homes on the market that are selling in less than 38 days. So when there's a disparity like that, I probably tend to think that the average is being skewed up by some listings that are 100, 200, 300 days old. There's not a ton of those, but there's enough to I believe, skew that average higher. And so I typically like to report the median days on market. Let's talk about mortgage rates. Fed day came and went. And if you follow that loosely, you'll know that the last couple of Fed meetings we've had, the Fed has come in and said, oh yeah, today we're reducing our rate. And then the next day or the same day, mortgage rates have spiked. And you might think that doesn't make any sense. Unfortunately, the Fed doesn't actually control mortgage rates. You've probably heard that. Talk to your mortgage lender to get the best advice on this and the best insight. Basically, mortgage rates are not controlled by the Fed. They're controlled by a number of factors: the bond market, the investors in the bond market, various factors. But what happened on Fed Day is, yeah, the Fed reduced their rate today, but that was already expected. That was already anticipated. And so that didn't do anything to rates. What changed is that the Fed gave their outlook for the future of rates and where they see rate cuts and how many are there going to be, where do we see rates in a year. They all gave their opinions on that. And when that happened, it was actually a lot less friendly than the market expected. People thought there's going to be a certain number of rate cuts. The Fed says, well, actually, we don't think we're going to cut it as much. And mortgage rates tend to look at the future of what's going to happen tomorrow. They don't really look at what's happening today because, one, it takes a long time to close a mortgage. If you go under contract on a house today, you're not going to get that mortgage won't be written today. It'll be written in 15, 20, 30 days. And then on top of that, after the fact, your mortgage lender is most likely going to sell your mortgage in the secondary market, sell it off to investors. And so they have to think, okay, when we sell that in 1, 2, 3 months, what are we going to be competing with? Where are bond rates going to be? And that is a little more determined by the Fed and again, the investors in the market. And so when we see something negative that's going to happen tomorrow, that's when we see rates go up today. If the Fed changed their mind and said, hey, in 3 months, we're going to reduce our rates dramatically, mortgage rates would probably go down today. It's more about the outlook for the future that controls these mortgage rates. Anyway, thanks so much for watching our video market update today. The holidays are a very interesting time in the real estate market. If you have any questions or just want to talk more about these numbers, what they might mean for you, what it might mean for your home value, hit me up, let me know. I'd be more than happy to chat with you about it. And stay tuned for more updates.